The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Well, welcome to Squawk Box. I'm Steve Sedgwick with Karen Cho in Barcelona at the Mobile World Congress. These are your headlines. President Trump's tariffs take effect, keeping his promise of 25% levies on imports from Canada and Mexico and an additional 10% duty on China.
They can't come in and steal our money and steal our jobs and take our factories and take our businesses and expect not to be punished. And they're being punished by tariffs.
China and Canada retaliate immediately, announcing a sweeping package of counter-tariffs as both countries brace for a bitter trade war.
Meantime, tariffs put global markets on edge, with chip makers retreating and Nvidia erasing nearly $300 billion in market cap in its worst day since late January. Taiwanese chip-making giant TSMC makes a $100 billion commitment to build 5 semi-conductor factories in America, and what it says could be the largest single foreign direct investment in U.S. history.
And OPEC Plus oil producers are pressing ahead with the first output hike since 2022, boosting production by 138,000 barrels a day next month, amid pressure from the U.S. to cut prices. US tariffs against Mexico and Canada and an additional 10% tariff on goods from China have formally gone into effect. President Trump dashed expectations of further delays or changes to tariff levels yesterday, saying there was no room for the affected countries to make a deal.
It's going to be very costly for people to take advantage of this country. They can't come in and steal our money and steal our jobs and take our factories and take our businesses and expect not to be punished. And they're being punished by tariffs. It's a very powerful weapon.
It's a very powerful weapon, but I'm afraid it's a two-way weapon, sir. And as such, there are real concerns for both the Canadian and Mexican economies and indeed the US economy on the back of this. Canadian dollar barely moved on the back of this. The dollar up 0.23 against the peso, no change on the dollar-yuan pair. The Canadian government imposed 25% tariffs on $30 billion worth of US imports today, saying it will hit a further $125 billion Canadian dollars worth of products in 3 weeks. The Chinese Finance Ministry has announced tariffs of between 10 and 15% on a range of US agricultural products, whilst the country's Commerce Ministry added 15 US firms to its export control list. Well, Shri has more on the Chinese response from Beijing. Great to see you in China, Shri.
Great to see you, Steve. Thank you for that. Well, the empires strike back, and we are really in earnest in art of the deal territory now. So the countermeasures and the counterpunch from China is squarely directed at US agricultural imports into China. And let me just give you a sense of what we learned from MOFCOM and the Commerce Ministry in the last in the last hour or so. China will impose 10% tariffs on US sorghum, soybeans, pork, beef and seafood, fruits, vegetables and dairy products, 15% tariffs on US chicken, wheat, corn and cotton products. MOFCOM has added 10 US companies to the unreliable entity list and 15 US entities to the export control list. So Beijing has really come out swinging here, and it's very clear that they did not want to be embarrassed or caught on the flat foot in the beginning of the very important, the closely watched 2 sessions, which is, tomorrow we get the NPC, which is the main event, and that's the annual, very closely watched annual parliamentary gathering. And it's fair to say that the tariff narrative has really usurped and overshadowed the agenda here. This was supposed to be an agenda about setting the policy priorities economically and politically for 2025, and they will be the economic targets and fresh policy support, it looks like China is going to have to think more ambitiously about what kind of support measures it brings to the table. But in the here and now, the real issue is about the debt deflation spiral. That deflationary picture, that slower growth environment could become a lot worse if China and the US do go down this retaliatory tariff rabbit hole. So this does look like escalation. And the currency may also be a factor here. That's going to be something of a double-edged sword to protect the export growth side of the equation, which, let's face it, Steve, is the last leg standing, arguably, for the Chinese economy. And if tariffs do worsen that particular picture and do impact Chinese export growth potential, then it's going to be very bleak days ahead for China's macroeconomic landscape. In terms of the numbers and what to expect tomorrow from the MPC, expect to see a lower revision to the annual CPI target, 2%. Versus 3% prior. So 2% would be the lowest in over 2 decades, and a nod and a clear acknowledgement by the authorities here that China is really mired in something of a persistent deflationary spiral. As far as the workaround to this, we're not going to see any big bang stimulus. It's going to be very directed. It's going to be very targeted at the consumer, at social spending, and at issues like childcare and low-income families, fiscal support for pension payouts and social insurance. Also, watch out for the budget deficit to be increased to 4% from 3% prior to really take account of this increased spending. But clearly, tariffs usurping the agenda here one day ahead off the MPC. Back to you now, Steve.
Great coverage, Sri, and I know we'll come back to you in a short while. Thank you very much for that. Quick look at the US markets, because I've got a brilliant guest on set with me here. They didn't like what they saw. They didn't like the Atlanta Now Fed survey either, which says the US economy could, and it is volatile, could have fallen 2.8% in the first quarter. Of course, we're still in that first quarter, but again, flashing red. NASDAQ lost 2.6%, huge declines for Nvidia. Let's have a look at Nvidia. Was it $300 billion wiped off as well? I think it's gone from first to third in terms of the biggest US companies now, trading at 114. Microsoft lost a couple of percent as well. Asian indices and where they're currently trading look like this. Pretty chilled, actually. The topics, which put on about 1.8% yesterday, losing some of those previous gains. And the European futures, last time I looked, they are called quite a bit lower, but again, nowhere near the dramatic declines that we're seeing in the United States. Nomi Prins is founder of Prinsights Global and is one of our best guests, so listen in. Hey, Nomi, how are you?
I'm good. How are you doing?
Yeah, I'm great, but I'm struggling to keep up with the news flow from this administration as well. Why don't you give us the broad brush of what you think has just happened and the ramifications for Americans, if nothing else, because the world has been ready for this to a certain degree. Mr. Trump has told Americans that this will be a brilliant set of policies for them. It will lead to a golden age for America, make it great again as well. Do we believe that's the case?
Well, I think at the moment voters don't fully understand, certainly ones that supported the policies regarding economics, regarding tariffs, in particular of this administration, and how, and they don't understand necessarily how it's going to impact their wallets quite yet. So there's this period where there's a disconnect between understanding of what tariffs will actually do, which is not just drive costs up, but make certain products more limited, potentially lead to job losses in any of the supply chains that are connected to any of the issues surrounding the tariffs or the products. And so they don't necessarily understand that. But the reality is, when the Trump administration, when Trump talks about taking money back, getting American money back from trading partners, it's far more complicated than that for two reasons. One is that even the amount from the 2018 tariffs, or tariffs in general related to the whole budget of America, is less than 2%. So whatever you may claw back, we are talking about a very minor part of the budget. But separate to that, what it creates is this whole sort of chaotic set of uncertainties which impact the market, which impact prices, which create the volatility that we're seeing right now in the markets and ultimately for people's pocketbooks. Because companies, and we saw this with factory orders going off a cliff in the latest numbers, and that's just before these tariffs have taken place. That's just on the anticipation of what might happen when they take place. Once money starts being taken away from certain products, once product change have to change, that's when they are going to feel things. And companies can't plan for that, so they stop doing anything. So growth stops.
There's some really smart people in the administration. Scott Pezant, Howard Lutnick, Mr. Lutnick and that. These are smart people who understand Wall Street and understand economics. I would never take that away from any of these people. Why are they not damping down some of this further for tariffs? Why are they not acting as the grown-ups in the room?
That's really interesting, because on Sunday, both of them in independent places, both Lutnick and also Pezant said, alluded to the fact that Mexico and Canada had done enough with respect to cross-border demands from Trump to somewhat potentially, they didn't say this in words, but alluded to perhaps not get up to the 25% in tariffs. So they're thinking one thing, and they're trying to sort of tame perhaps what they're hearing versus what they want to have happen. But then on the other hand, we see that Trump does act very independently from even his senior secretaries. And so that creates, again, uncertainty in the White House, uncertainty here.
Money talks for Trump. He's transactional. We all know about the art of the deal, although apparently the author of the art of the deal, who have ghostwrote him, is now disowning this book, but that's another issue. But he understands what sponsors say to him. He understands what Wall Street does as well. Surely Trump realizes that if the money is not being invested, if people are getting scared, if people are losing money, whether it be on Wall Street or whether it be in their 401ks, surely that's a big catalyst for him.
It should be, and they are. I think hard to know what's inside his mind, but it seems like he is really going full thrust on the power element, the American ego element, if you will, of tariffs, and how this is going to make people obey these. He considers them punishments for other countries, when in fact, again, if you look at the numbers, they're punishments for the world, and they're certainly punishments, as we're seeing for 401ks and for corporations in the United States. I don't know that he thinks the markets would have been this negative. We did see in 2018, the markets closed the year negative in the first year of tariffs. Of course, the Fed came in and dropped rates by 100 or so basis points as well towards the end of into 2019. So tried to temper that as growth slowed. We're going to see that now. And he's going to have to come to terms with growth is going to slow, prices are going to increase, and tariffs aren't going to feed the till of the United States Treasury.
The Fed to do what he wants them to do if prices increase. Karen is in Barcelona and she's got a question for you, Nomi.
Nomi, I wanted to ask you about some of the market expectations, because it feels like investors have been hopeful that we do have a transactional president, that we will see some sort of negotiation deals done. Even last night, Goldman Sachs was not ruling out a last-minute pause in the tariffs coming into effect. So there have been hopes pinned on the fact that we could see this kicked out into the long grass and some sort of negotiation. That's simply not happening today. So where does it leave the US Federal Reserve in terms of rate reductions, holding or even hiking from here, if we're talking about, as Goldman Sachs says, core prices in the US will go up by 0.6%?
Yeah, that's an excellent question, because I believe the Fed's going to have to pivot to looking at declining growth more than they are looking at increasing inflation. So though prices will increase as supply chain tariffs take effect for the United States, within the United States, around the world, and that will put pressure on prices, that will increase inflation, it is also contributing and will contribute continually to lower growth in the United States, because again, decisions are being made on the basis of growth rates are still relatively high, and there is so much uncertainty with respect to tariffs and everything else that's coming from the administration. So I believe that the Fed's going to have to examine negative growth and lower growth coming in, examine a potential period of a recession on the growth side, even with higher prices. And I think it's going to have to step in, and it's going to have to decrease rates by more than the 50 basis points that they put on the table at the end of last year to balance that out.
Nomi, what's been interesting around the announcement overnight is really the lack of carve-outs. I know car makers were hoping to negotiate some sort of help or some sort of support here. Electricity receivers from Canadian Electricity. These are such blanket tariffs at this point. Do you think there is room for negotiation? Does that take the heat of certain sectors if that were to be forthcoming?
I think there is, and we did see this in the last go-around in sort of Trump tariff 1.0. We did see tariffs be put on the table. We did see certain things like steel and aluminum come back off and be reduced. And so we can definitely say that there's room for that. I think what's going on right now is that Trump is deciding that if there's a sort of blitz with respect to how these tariffs are rolled out, and of course we've got retaliation from countries like Canada and China, we're going to continue to see that there will be room. And I think a lot of those negotiations are likely to happen behind the scenes as they did last time. So the announcement looks strong with respect to the United States. We're doing tariffs, we're taking our money back, but in the backdrop, we will see these deals being made because corporations are going to get upset. The market is going to continue to get upset, and Trump doesn't really want that sort of red line down on his docket either. So I think those conversations happen more on the quiet.
The Journal called it the dumbest trade war in history about a month ago as well. How bad is this dumbest trade war in history, according to the Journal, which a lot of people would have sympathy with that view? How bad is it for the rest of the world? Will it lead to autarky and other nations actually turning their back on the US? Well,
we are seeing that happen in real time. There's a certain PTSD from the first set of tariffs. And I think countries were prepared. China was prepared for raising their tariffs this time for all the retaliatory measures. Canada's more retaliatory than it was last time. So there is definitely a feeling that we can't wait to kind of tariff back. And that creates the dumbest tariff war because you have a heightened set of stakes. You have more uncertainty about what's going to happen, whether tariff deals behind the scenes are going to happen, when they're going to happen. And countries are stepping in to do what they're doing. Now, since the last tariff set, China, for example, has had a 70% increase. The countries that are trading with China, 70% of countries are trading more with China today than they are with the United States since 2018. So we've already seen that happen.
I've got a CEO waiting, so I'll just squeeze one more quick question as well. Are they trading with China not using the dollar? Because if the dollar at some stage, and I know it's in the mid to longer term at the moment, loses its status as the reserve currency of the world, then problems for America will build up.
Right, because you can't control your currency. What's happening right now is we're seeing the dollar decline after the bump that we had post-election, and that's partially to this. Not all those deals, of course, are not in the dollar. A lot of them still are. A lot of them are countries that is still their base reserve currency, and it is still the global base currency. But there are more and more deals. China is definitely showing that it has the might, the ability to create agreements with other countries, and other countries are trading with each other and away from the U.S. So trading away from the dollar is the natural evolution of that. Currently, it's not going to drop off a cliff, but that is one of the reasons we will see dollar weakening and more trade happen in dual currencies than we're seeing right now.
And they would have less dollars to recycle, perhaps into US assets and US treasuries, which again might have ramifications further down the line. Nomi, thank you so much. I could have done this for the rest of the show because Karen and I love chatting to you. So thank you very much indeed for that. Nomi Prins, who is founder of Prinsights Global. Karen.
Steve, let's push on to some tech news as TSMC shares are trading lower. This as the company announced a fresh $100 billion investment into the United States, a move which could potentially help ward off tariffs on chips from Taiwan. And coming up on the show, plenty ahead, the US reportedly pauses all military aid to Ukraine just days after President Trump's public row with Ukrainian leader Volodymyr Zelensky. We'll discuss next. Plus, OPEC says it will proceed with a planned output hike in April. We'll bring you more on that later this hour. And earnings season continues here on CNBC as we speak to Bilfinger CEO Thomas Schulz. That is right after the break.
Kelsopre's company exposed to defence and civil aerospace is doing pretty well, and that's Thales. Reported better than expected, 8.3% growth in full-year sales. Look at that move yesterday, by the way, 16% higher. The French defence giant says it expects increased profitability this year, boosted, of course, by higher defence spending and recovering air traffic. We're going to have more on the numbers. CEO Patrice Caine later today. Tune into that exclusive interview, 12:15 GMT. Bilfinger posted a 13% rise in full-year orders, whilst revenue rose 12% to just over €5 billion, although net profit just eased a fraction. The company confirmed its midterm targets, expecting an EBITDA margin of up to 7%. Fabulous to speak to Thomas Schulz, who is the CEO of Bilfinger, who joins us now. Thomas, really good to speak to you. Lots of macro issues to talk about, but let's first talk about your numbers and your company. How was the latest set of numbers for you, sir?
It was a very successful year, 2024, for the Bilfinger Group, and it will be a successful year for 2025 too. All the figures are double-digit up, cash flow in the sixth quarter constantly positive. We are over the 5% EBITDA target, what we already promised in 2016, so we can't complain.
Where, Thomas, are you seeing the major catalysts?
Actually, we support clients to get more efficient and more sustainable. And it doesn't matter if they grow or if they have to decrease their capacity. We have products to help them to do so. And that actually is at the moment quite a nice spot in such a volatile global market.
In two ways, I guess. One, the fact that the price of hydrocarbons remains under pressure. Two, margins in petrochemicals and chemicals more generally also under pressure. And at the same time, questions being raised about the pace of energy transition as well. These are bigger factors, but how are they playing into your numbers, Thomas?
They actually play in that way in that most of our clients with the existing assets are trying to improve them. Energy efficiency improvement, sustainability improvement, educate based on labor shortage, educational improvement, all these things where we as Bilfinger actually can support our clients. And that pays off.
Yeah, I mean, just in terms of the geographical breakdown as well, of course, there appears to be a growing schism, I think it's fair to say, between the approach of Europe to its energy needs and that of other parts of the world, namely the United States as well. How are you playing those different markets, Thomas?
You are completely right. We have to look into the different areas in the world with a different local strategy. In the US, we see quite a lot of investments coming, more what we call the established energy supply, oil, gas, LNG. And in the Middle East, similar, but with more trend to the green, to the sustainable energy part. In Europe, it's an absolute mixed picture. We have Germany in that so-called energy transition, which really didn't take off that well, where we think that the new German government will take some steps back to secure a lower energy cost level for the German industry and especially for the German citizens. That in all will deliver for the European citizens and industry a lower energy level too, energy cost level too.
It's fascinating, isn't it? And you and I talked a little bit off camera, but given everything that's going on tariff concerns and trade policy stateside and how it affects Europe, plus you've got a new commission which has promised to inject vigour into the European economy, plus you've got, as you just mentioned there, Friedrich Merz coming in as well. I can't help thinking that the stars are aligning for greater investment and greater capital spending in Germany and broader Europe as well. If we don't seize this opportunity, well, then we're never going to seize it as well. Do you think we will?
We definitely will. And it will be a good time. I know it's a big time of concern. We had just yesterday here an attack in Mannheim with 2 people killed by a car. There's a lot of uncertainty in all societies, not only in Europe, not only in North America. Now it's the time to step up and to do the things which are announced. And I think in Europe, we have a good potential to go positive, which means if the politicians across Europe, especially in Germany, the new government is investing into infrastructure, into defense, into education of the people, in really more working time in Germany too, which means labor work is paying off better than before, then Europe will grow in such a difficult time.
And that's the positive side, that Europe must seize the mantle. But in terms of the other side of the Atlantic, Thomas, are your investment intentions precarious? Are they on the edge at all because of anything you're seeing from the federal government rather than the states government?
What we see is that US is a good country to invest. We are not hit by tariffs as Bilfinger because what we supply into US is knowledge, because we are an industrial service provider. So we are not moving goods in and out. But what we see is that the US economy has a good potential to grow too. At the moment, it's a little bit in a limbo because with all the things ongoing with the government offices, a lot of things are not moving at the moment. But in 2, 3, 4, 5 months, the world will look different. I would not read too much into that, what we have in the politics versus the business. Business people are more long-term. We talk to each other. We don't have these kind of borders in between. We do business across the Atlantic in both ways. And as long as business talks, there's always a possibility to find good solutions.
Thomas, I love speaking to you. Thank you very much indeed for giving us your picture on the company and indeed the bigger picture as well. And of course, as a channel, our thoughts go out to all the people affected by that horrendous incident in Mannheim, which caused such distress. And 2 people, of course, unfortunately have passed away on the back of it. Thomas, our thoughts go out to people of Mannheim. Thank you very much indeed for joining us today. Thomas Schulz, the CEO of Bilfinger.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.